No, no, don't worry. You didn't sign up to a new channel. You didn't subscribe to one of those hundreds of thousands of other channels that run this exact same format. I am just simply running an experiment when it comes to the thumbnails right now. I want to see if it is in fact just that easy, or if my entire like weeks long rehaul that will eventually be coming out very, very shortly was all for naught and is just simply riding the trend that's out there right now. Don't know for sure, but I think that this is the perfect topic because it's so multi-layered. So if I just want to run one experiment, don't have to kill me. But don't worry, no, there's actually going to be substance to this. This isn't just clickbait title or anything like that, and then somebody just goes and huh over a one singular tweet or something like that, and then extrapolates just a whole bunch of nonsense out of it. No, no, no. We get to dunk on Mad Money Man himself before we get into the nitty-gritty, because hey man, over here I like to provide facts and substance, a little bit of steak with all of that sizzle, and that's what keeps, the people that I appreciate, that's what keeps them coming back some more. But first and foremost, about a week ago, CNBC's Jim Cramer urged viewers to buy Silicon Valley stock last month. Just like sands through an hourglass, so are the predictions of Jim Cramer. Like, this dude he's batting Hall of Fame numbers for being just bum-ass wrong on every single prognostication. Every once in a while he gets something right, but that is overshadowed by his bloviating, ironclad predictions on something that's just going to fail spectacularly, and he's still on CNBC. Like, it's amazing. He must have the wettest mouth and softest hands in all of television. Like, nobody can fail that hard and still remain on television. Like, at least Brian Williams got a demotion for being an outright liar, but Jim Cramer, maybe it's just all entertainment value that he provides over there at that point in time. But anyways, let's get into his most recent of failures. CNBC analyst. Could you also call a Magic 8 Ball an analyst at this point in time? It's at least a little bit more accurate. CNBC's resident zodiac expert, Jim Cramer, is once again being pilloried on social media after a clip resurfaced showing the Mad Money host recommending viewers buy shares of Silicon Valley Bank's parent's company, which owns the tech-driven commercial lender that swiftly collapsed on Friday. Yeah, this all came down yesterday. I was looking at it, it's like, wow, that's insane. I don't know a goddamn thing about this at all whatsoever. I'm so out of the loop. It's like the whole Sam Bankman-Fried gimmick. It's just, I don't know anything about crypto. Like, I am so brain dead when it comes to this stuff, and then especially when it comes to tech startup banks. Dude, it's the exact same thing. Like, there's so much stuff to learn on this, and I just don't want to jump in there and be like, hey, do you know a bank collapsed? Well, what does that mean? A bank collapsed. So yeah, it took me a minute to come around on this. Okay, so just calm your horse. We'll get into the actual substance here in a second. The ninth best performer to date has been SVB Financial, the bank's parent company. Don't yawn, Cramer told viewers during a February 8th episode of Mad Money. Cramer listed SVB Financial among his biggest winners of 2023 so far. Fucking oof. Alongside blue chip stocks such as Meta. Well, they'll bounce back. Tesla's actually bounced back. Warner Brothers Discovery, they're still billions of dollars underwater, and their newest slate of promising endeavors, well, it doesn't look very good. Like, listen, I like professional wrestling and me, we go way back, but Warner Brothers and Discovery are engaged in talks with AEW to give them another hour of wrestling. Like, that just came out today. It's like, the fuck are you guys doing? Like, nobody watches the Friday show. Not even 1 million people watch the fucking Wednesday show. Ever since they launched the Friday show, the Wednesday show has taken a hit, and you want to put out a Saturday show on top of that? Brother, fuck are you guys doing over there? And Norwegian Cruise Lines. Okay, it's like Meta, okay, Meta's going to be around because there's no real competitors to Instagram and Facebook. Like, all the old boomers, they're still young enough to be using the platform for a considerable amount of time. And also, they can just continue to purchase up other things as well. They'll eventually get that whole metaverse gimmick right. But as of right now, yeah, they don't really have anything spectacular on the horizon. Yeah, sure, their user base shrunk last year, but this stock advice is equivalent of saying, buy gold and precious metals. It's like, oh, okay, cool. You get an entire television show by just giving you basic bitch advice. Makes sense. This company is a merchant bank, with a deposit base that Wall Street has mistakenly been concerned by, Cramer said in the clip. Cramer touted the fact that the bank was less dependent upon private equity and venture capitaling offers. I've seen a little bit of the stuff behind with some people who are doing some digging on. That's why I want to wait to do kind of the more salacious stuff. Probably tomorrow. More than likely tomorrow I'll do a follow-up on that, but that just doesn't seem to be correct there, Jimmy. He said the stock was the fourth worst performer in 2022, but it is due for a turnaround. Just not yet, though. And not likely ever, because now it's basically in foreclosure, or the financial services equivalent. FDIC? FDIC? Is that appropriate? Can I say that? Who cares? Though it is worth buying, according to him, right? Being a banker to these immense pools of capital has always been very good business. Yes, they were funding a bunch of tech startups. They were right down there. It's Silicon Valley banking, for Christ's sakes. I think the name implies where most of its consumer base is going to be. Come on, it makes sense, right? The stock is still cheap, Cramer said. At the time, SVB was trading at $320.40 a share. That may very well be true on a 10-year, 5 to 10-year scale. It might be cheap in the grand scheme of things. It's just over the course of the next month, it just plummeted through the fucking floor. So just about got that right there, Jim. The Post sought comment from CNBC. On social media, critics of Cramer made sure to remind others of the now ill-fated stock tip. About a month ago, Jim Cramer urged investors to buy Silicon Valley Bank stock, one Twitter user observed, adding, "Today, the bank was closed by California regulators, making it the second largest banking failure in U.S. history." And we all know what the first one is, and that's what it's kind of being equated to at this point in time, but interesting. It's interesting because there's a lot of things as well that you can see the one off in the corner. There's a lot of fear mongering about this right now, but obviously the stock market's closed over the weekend. There's a lot of after hours trading, but that could all amount to a hill of beans. So everything is definitely going to hit the fan on Monday. Stay tuned for that. But yeah, okay, as you can see, he's got his little chart behind him, and yeah, okay, over the course of a month, if you're doing any sort of long-term prognostication and thinking a stock is still cheap, you would be looking at a much longer time frame than that. And yeah, it's still continuing to go down, but it's just off its absolute high at the beginning of February, depending on what that stock looks like. Interesting. Well, we know he was ultimately wrong, but we could go in hindsight, we could see where he's at least trying to lean. Moron. Another Twitter user wrote, at first it was funny that Jim Cramer was always wrong. Now it's extremely sad how many people and families he's destroyed by always being wrong. But now that you know he is a consistent wellspring of terrible takes, you can kind of run the inverse whenever he promotes something. Like right now he's saying, don't worry guys, JP Morgan Chase, it's a fortress, nothing bad's gonna happen, and everybody's in his replies just going, oh my god, Jamie Dimon must be putting nets outside of the headquarters right now. We'll have to see. We'll have to see. His half-life on this shit is about a month or two, so the banks start to collapse. Well, can't say he didn't warn you. So let's get into some of the nitty-gritty here. Okay, SVB chief sold $3.6 million in stock shortly before the bank's collapse. Fucking oof, my guy. That's tough. That's tough. Documents show that CEO of Silicon Valley Bank sold $3.6 million in shares of the failed financial institution's parent company several weeks before its collapse. Oh, after realizing that, I just need to sell a whole bunch of shares because Jim Cramer said that this was a great time to sell, so I'll just put some out on the market. Makes sense, right? The biggest U.S. banking failure since 2008 that sent a shudder of anxiety across the markets. With the filing with the SEC shows that Greg Becker, who joined SVB as a loan officer 3 decades ago before becoming CEO about a decade later, sold 12,451 shares of the bank's parent company, SVB Financial Group, on February 27th. Becker sold the shares in accordance with the trading plan filed on January 26th, a little over a month before the group sent a letter to stakeholders saying it was looking to raise over $2 billion in capital after taking losses. Interesting. interesting. Okay, so that was all scheduled on January 26th. Interesting. So then that triggered a month later. Yeah, I don't know, man. That whole term insider trading gets thrown around a lot, but we'll see. We'll see. Does this have a touch of Enron to it? An inquiry sent to the SVB outside of normal working hours, asking whether Becker was aware the bank's plans to try and raise capital was not immediately returned. Yo, what's this dollar store Colin Mockery doing right here? Yo, that dude's creepy as fuck. The announcement sent SVB stock plummeting and prompted its lightning fast unwinding. The bank shares fell more than 60% after the announcement, wiping out $9.4 billion in market value. Oh, so now they need to raise $11.4 billion. How? I'm sure that'll just happen. Don't worry about it. Jim Cramer's on it. He's crunching the numbers. Sparking fears of a contagion. Lots of chatter today about the possibility of generalized U.S. banking system stress due to SVB troubles. 3 summary things on this. While the U.S. banking system as a whole is solid, that's not going to stop all of these banks from being gives me from the government. And who's in the Oval Office right now? Oh, right, the last guy who was in charge of cutting the checks in 2008. Big think on this one, huh? That doesn't mean that the whole banking system is solid. That does not mean that every bank is. Case in point, Silicon Valley Bank, that just went tits up overnight. Stated economist Mohammed A. El Iran in a tweet. All right. SVB failed on March 10th, just days after the bank sent a notification signaling it scrambled to raise capital after reporting a $1.8 billion loss that's being forced to sell treasury bonds, to meet its deposit obligations. So it was out of money. Like, they still had money on the books, like on the computer of the customers that they had, but they didn't have the finances behind it. That's wow. That is some Bernie Madoff type shit. That is some Ponzi scheme ass motherfuckering. The FDIC, which has a mandate to protect depositors in case of a bank failure. Yeah, see, that's why, the Federal Deposit Insurance Corporation had to step in on this one to become a receiver. Bank shut down. California regulators ordered that the bank was shut down because, they don't got the money and people need to get their money. And that's why, they're insured by FDIC. So, this is going to be a big federal investigation that might take a long time to get to the bottom of. Like, how do you guys run a $1.8 billion loss? Like, how does that happen? That doesn't just happen overnight, man. SVB had approximately $209 billion in total assets and roughly $175.4 billion in total deposits as of December 31st, according to FDIC. At the time of closing, the amount of the deposits in excess of the insurance limits was undetermined. There could be some people out on their asses on this one. The amount of uninsured deposits will be determined once the FDIC obtains additional information from the bank and customers. As of the end of 2022, SVB had around 89% of its $175 billion in deposits that were uninsured. What the fuck? Not just about 90% of your shit you couldn't come up with. I've been pretty good. I've dealt with some pretty good local banks in my time, but there was one time that the banks really fucking pissed me off, okay? When I went to go cash my paycheck, I was working a warehouse job, and I went over at lunchtime. They were one of the last places on earth to cut physical checks. Like, this was about, I think a little over a decade ago at this point in time, but they were still cutting physical checks. Like, the fuck are you guys doing? Oh, we're mom and pop shop, and I got my things to say about working for small businesses. If you work for a family business and you're not inside of the family, you're just as well off to work for a corporation because at least there's a ladder to climb. But that's another discussion for another time. But I went to the little local bank that was there. Went to go cash my paycheck. And I've had the account for nigh on a decade at this point in time. Never had a problem beforehand. It's like, oh no, we can't deposit that right now. We have to hold it for about a week. And it's like, sorry, what? Oh no, there's been other scams that have been run in the bank recently, so we just need to hold this. It's like, that's never happened to me, so why are you guys doing this? Well, if you had enough money in one of your other accounts and that you could float it for the time being, then we would be able to insure it. So, you guys don't have enough money here in order to press a couple of keys on the keyboard, so you're holding me hostage for a week. you can go fuck yourself. And then I closed down my account and went somewhere else because I knew that that place was going to be going tits up. And guess what? Lo and behold, big old name change that was announced just a couple of months later. Big think on that one. So anyways, back to this. Just a nice little fun personal story. The FDIC has said that it will pay uninsured depositors an advanced dividend sometime next week. Yeah, we'll get around to it. So cool. Your tax dollars at work, ladies and gentlemen. Uninsured depositors will be given receivership certificates for the uninsured portions of their deposits. Well, given the fact that it's about 90%, there's going to be a couple of IOUs written. Given receiverships, yes, certificates for the uninsured portions, and the FDIC sells SVB assets. Depositors may receive additional future payments. SVB is the largest bank failure since the 2008 financial crisis when Washington Mutual collapsed. There were so many financial institutions snatched up in the GFC. I know a lot of people think that the recession that we're currently in is going to be either better or worse or on par with 2008. There's a lot of indications that, because that one was all stimulated by the fact that you could get a loan for a house by basically fogging a mirror and writing an IOU, and everybody's like, good to go. That was how that one came around. And given the fact that, at least in the United States, there is a surplus of single-family homes, not likely to happen in that form or fashion, but there's a bunch of other tells as well that could indicate just because there's enough homes on the market doesn't mean that the other outlying infrastructure is there enough in order to stimulate the policies that this current administration is wanting to run. So there's a bunch of moving parts. So yeah, the shit is more than likely going to get considerably worse before it gets better. And you'd love to hear from the president at a point in time like this, but it's about the weekend, and yeah, Joe's up in Delaware. He's probably sorting through all of his classified documents. Remember when they found classified documents at the president's house? Yeah, that seems like a lifetime ago at this point in time. So, with all of that said, thank you all very much for the gift of your time. I've been Don Consuelo. I want you to follow your gut and get after it. Take care, everyone.